Good morning, guys. Welcome to another Trade for a Living podcast. My name is Rudo, and this is our Bitcoin short. The recap from where we were Monday, we explained to you guys that the market would potentially push into the $114,000 range, maybe even as high as 115. We didn't want to see it go above 116 because then it would change the narrative to being bullish. So in today's stream, I want to look at this short, whether this is in fact something to celebrate, whether we're going to go and hit our take profit targets, which I will also share with you guys. And then also we need to look at the other side of this now from a bullish perspective. What if we build a base? Where should that base be? How would it look like in order for maybe a push to at least 118 again, which could be an amazing bear, a bull trap and a nice short. So that and a lot more in today's stream. Also have a special guest coming in. He's our heavy metal guy. We're going to be looking at gold. We're going to be looking at maybe even some silver in the background there. The guy has been up since 2 a.m. Our time, shorting the hell out of the market. So he is loaded and jittery with coffee, but I think the content's going to be good, so it's going to be exciting. And then later on the stream, we're also just going to have a look at some of our altcoins. There's been a couple of those that's been holding strong. So altcoins like COAI, maybe, and an altcoin like Cajun, maybe, where we still have upside potential pointing out to. So if all of this tickles your fancy and more, you know what to do. Hit the like, hit the subscribe, share the content. And I'll get into the charts with you guys. Before we do that, just a friendly reminder, today's video is brought to you by Bybit. Bybit is a channel sponsor. If you want to support the content, what you need to do is just open your Bybit account. Links in the video description. Head over to the Discord and claim your Bybit role, as well as your buddy indicator access, as well as your Discord access compliments of that. Okay. All right, guys. Now that has been said, let's bring in our guest. Good morning, Mr. Wizard. Or I think we need to have a different for the wizard part. How you doing, man?
I'm great, Rudo. Thanks. Yes, it's been a fun, I would say morning, but it feels like night. But yeah, it's been a very fun last few hours. Market's very interesting across all commodities. I'm as a scalper, I'm really enjoying the volatility. I think there's a lot of opportunity in pretty much quite a lot of assets at the minute.
Yeah, there is. We do have this crazy, 5% up and down days for a Bitcoin, So there's definitely, on a leverage point of view, some money to be had there, some easy money to be had, to be honest with you. So let's have a look at Bitcoin real quick. I'm going to share my chart, and I'm just going to. This was the uber bullish view that I had, with the argument being that, this is just the beginnings of us completing a one, and maybe if we were to push into the 150s and the 170s from this base that we created here, this could be potentially the case. The alternative argument was that this is the case, which means we have a lower three, but we cannot fall below 105 thereabout, because then it will invalidate the wave count. Because typically, if your 4 goes below your 1 from an Elliott wave point of view, you have what is called a leading diagonal or ending diagonal, something like that, which means it brings the 5 down quite low. So my eyes currently is living at this space here at around 106, 107 thereabout, because if the short falls below that range, it changes the outlook, and it definitely opens the door for a little bit more downside. I don't know. Do you have any targets regarding that on Bitcoin that we can quickly have a look at?
I think for me, looking at my Bitcoin chart, and I'll pull this out a little bit so you can see the pricing. There we are. I think for me, from a scalping point of view, is we're just trading between these two liquidity zones. So there's a big patch of liquidity here, which You can see we came up and tapped. So that was where my short order was yesterday. So I got tagged in a short at 13.8, 113.8. And we're back down into what was this liquidity zone before, which has provided fuel for this move, provided fuel for this move, and this move up. For me, I think the invalidation is if we drop out of here. If we drop out of here, I suspect we are then searching for the next pot of call, which is probably just below 100k here. Yeah, I wouldn't be. I have no urge to take swing positions on it yet until we see some form of clarity on direction. But I think some of the volatility, certainly between the liquidity zones, is an opportunity to play.
Definitely. I've got, I don't really look at these charts too much, but what makes for an interesting talking point is you can still see there's a little bit of squeeze happening there for the bulls on that side. And what I do like of this way of representing it, it kind of shows you the amount of guys going 10x, 25x. So it tells you whether we're degenning on the lows, whether the guys are going big, or whether that is larger players maybe buying a 10x or a 5x. And the 10x's are only, sitting around 103. So where we're at right now, it's still, I think, retail sentiment being bullish with a lot of, 50x, 100x leveraged positions in there. So a little bit of more downside is going to squeeze the hell out of those guys and probably test the bottom end of your liquidity zone that you've got there. So if we look at that target on your screen, we're looking at around 108, 107 thereabout.
Yeah,
kind of lines up with this, starting at around 107,000 if you look at the liquidity map.
Yeah, exactly. I think, I think as we've mentioned this week, a lot of the price action will be choppiness until Friday. I think Friday, once we get some CPI data and we have sort of a firm number in the book ahead of after. I think it's week after, isn't it?
Yeah. CPI is Friday at 2:30 p.m. our time. And then, I think it's tricky with the government shutdown, but I'm trying to scroll through that. You see FOMC is Wednesday next week.
Yeah, because we've not had any US data official for a long time. And I think some of these moves are beginning to front run. I'm fairly convinced that the big players and the institutions, etc., already know exactly what the data will be, simply because they have deep pockets and can pay economists that you and I could get nowhere near to ever. But I think they probably know exactly sort of the state of play and what to expect. And I think some of this is front running, and I think some of this is just a nice little volatile shakeout.
Yeah, no, I think the same way. Let's head over to the comments real quick. Let's quickly say hi to everybody. Hello, Dean. Hello, Nick Hill, and Jerry, as always. Anybody else joining in live? About 150 people live right now. Let's give Mr. Wizard a 777 there for all his heavy metal trading. Let's congratulate him on that. The Liesel's also jumping in. Hello, morning, Liesel, and there we go. Okay, right. So the liquidity grab. How would you consider? And there's Afi on Twitter as well. What's up? I see every now and then Twitter comments pop through. I don't know why it's so slow, but Twitter is not a very nice space.
No.
Come on, Elon. Fix it. So what would be your next play for Bitcoin if you now need to start thinking about your next trade, planning your next trade regarding the choppiness, factoring in the fact that you're saying it's going to be choppy, because that probably will alter your trade strategy slightly.
Yeah. So I think certainly from a scalping perspective, it'll be, I'm starting to build positions. Anything under 108, 110 is where I'm starting to build, but I tend to use for these scaled orders. So I'll use a scaled order that spreads across across that liquidity zone with the invalidation below.
Okay.
Is how I'd play it and look for those smaller moves. But
And
I've
then,
not been playing too much on Bitcoin, I must admit, apart from these swing plays, these swing scalps.
yeah, and then if you were to now push that up high, because we'll look at where you were playing right now after this, where would you try and drive price towards? Are you going to go for that 114 again, or would you imagine we're going to push a little bit higher to say 117?
I think this zone first, but higher in this zone because there's a lot of untested liquidity here. You've got quite an interesting zone around this 115. Is probably where I'd aim at. I think before moving to here, I'd want to see it push through and retest. So I'd probably leave a little runner in case we do go straight through. But if we break through here, I'd probably then be looking to see how it reacts on a retest. I don't think we go straight up into this zone without having some movement inside here first.
There's some choppiness in that 115, 114 zone. Okay. So I'm going to bring up my point and figure chart real quick. So let's quickly analyze the point and figure targets. Maybe just as a quick recap, with the CME gaps, guys, which gave us a really nice play. Statistically, as we always say, most of them get filled on the first trading day, which didn't happen this week. It only got filled on Tuesday. But there's a 30% chance that it gets filled within the first week. And the fact that we've now tickled it and we're sitting at that zone, means that CME gap is pretty much tagged on. So if the market wants to be bullish, what we need to do is we need to reclaim, and we need to start driving into this imbalance that lives here at around 118. And the narrative for me around that is we can't go below the CME gap. We can't fall anywhere below that range. Otherwise, it's not going to look bullish. It's actually going to be bearish. And the argument is we could potentially see that lower low, which is the dreaded target. Why I'm still holding some of my shorts there. And I think you're also you've closed your short, haven't you?
I've closed my short, yeah. Yeah, I closed at 108. 108.5-ish, I think, was where I was fully out.
So for me, the big play is the point and figure chart is the easiest liquidity roadmap for me, or destination map, because it tells you exactly where the market is going to, go and recycle money. As I always say, if they want to bully price into one direction, as the story goes, and this is enough for the viewers, if you want to bully price in one direction, say you've got $1 billion to short sell Bitcoin right there, meaning absorb $1 billion worth of long players buys. Okay, take the other side of the market. Now, what happens is now it's going to start selling. Now you need demand. You need buyers to actually sell the market in order for them to take your sells off your hand. That's going to drive price back up. And you do that. The reason for that is so that you can add to your position. So you say if you buy one Bitcoin here, you're going to sell probably say 0.5 or 0.9 of a Bitcoin. And then you're going to use that money to add to that position again. So you can keep on driving price down. And they'll keep doing that until there's no more liquidity at the bottom for them to get out. Then they know they need to start playing the other side of the market. So when you can bully price, when you can actually push price in favor, it makes it easier for you because you can see whether there's harmony in trend. And the point and figure chart shows that beautifully in a way. So what we do have at this stage is we've got this swing sell zone area that we marked out, tagged nicely. So there's a little gap, say at 111,600. So if the market wants to become very bearish, my opinion is that this sell zone that sits now right there, let's just bring this over. Those have been tagged. This sell zone there will get tagged, and we won't go make a higher high from yesterday's high. And that basically, puts the coffin in, or the nails in the coffin for Bitcoin from a bearish point of view, because then the door comes. And as I always say as well, just to add on to this, is when you have a good buy zone fail, it will in most cases turn into an amazing sell zone later on. So we were looking to buy there, it failed. turned it into a sell zone, and then moved on further. So even if we're wrong, that's that retest scenario that you were talking about. Guys, if we're wrong and the market does do this, we can probably do that again and then head to the upside. So there will be enough time for you to reposition yourself to the other side if the market starts chopping us in that direction. Okay, so that's Bitcoin, everything on Bitcoin. Now, the reason you're here, we're talking about gold. Okay, so for me, it's been actually a painful chart to look at from the weekly point of view. It's always because it had all this gains, and I basically took none of it. Just like money just left there on the table from my end. But you weren't that lazy. Let's use that for a word.
No.
You were in it, and at the moment you're running with some nice gold trades there. So I'm going to bring up your chart. Let's quickly have a look at where we're at with gold and what would be the play. While you do that, I'm going to just read through a couple of comments and see if there's any questions. Let's see one from Mickey. If we get to 100, do you think we bounce on Bitcoin? What's your thoughts on that? Will 100,000 be an area for bounce for you?
I think we would bounce either side. I think the 100 is I always find 100 as a bit of a red herring, and I think you tend to have the liquidity sits on either side of it. So you either will likely get the bounce above and the 100 is protected, or you see something down in the 90s. I think that 100 is used a little bit as a psychological figure. But I think we probably get bought up. I'm still very bullish overall from a macro perspective. I think the headwinds are easing somewhat. I mean, as a gold, like there's money in the economy. Like you see it, gold has added crypto's entire market cap in 3 weeks. It's the money's there, and the money's in this area. I just think there needs to just be. I think they're just waiting for. They're waiting for the conditions to be right to push the button. But I think I think there's a finger on the button, but I don't think it's ready to be pushed yet.
They're toying with it. One thing I always know when you talk about round numbers, just to circle to that, is auction theory. Basically, if I were to ask Wizard, sell me your bicycle, give me a number now, Wizard, what would that number be? Let's say 10,000.
Yeah.
Okay, immediately, if he says 10,000, I'm going to go, okay, what about 7,500? That's a quarter level. I'm trying to negotiate with him. Mm-hmm. You're going to come back, and where you're going to be? You're going to be either at 90 or you're going to say no deal. And immediately, because those psychological numbers are there, that barriers are there, you will oftentimes find a bounce, because somebody would say, well, 100 is a good area. There's a lot of liquidity sitting in there. So for that reason as well, auction level theory, go read up on that. You will probably have a bounce at 100 by the time we get there. Okay.
Yeah.
Now, let's head over to gold. If there's nothing else, let's just quickly see. Liesel says, I'm very interested in silver. Is it worth looking at and buying? I think we'll get to that after gold, definitely. And yeah, man. So where are we at with gold, buddy?
So certainly from a weekly perspective, the chart is pretty crazy. We had this sideways consolidation over summer, and then we've just seen what I can only describe as a pretty relentless push up. So if you were in some nice swing positions here, this was quite a good opportunity to build some longs. If we zoom in onto the lower time frames, because I tend to scalp gold more, the daily I find is really interesting because we see that it's walked up here. And I think for those sort of unfamiliar with the scale of gold, and just to sort of put some context behind it, the amount of money required to do this is fairly unimaginable, certainly to the human mind. I don't think, especially sort of people in crypto, you can't comprehend the size, that the amount of money it takes to produce a candle like that, and a candle like that is nation states and central banks buying this in multi-billion-dollar clips repeatedly. That candle alone there, I reckon that is probably about $1 trillion, or not far off, for the scale. And you see the sheer amount that we've had selling off. So from a daily perspective,
crazy. Yeah, that's a crazy, because it's a giant market cap, guys, and that's the problem with Bitcoin. That's why we can't predict Bitcoin to 201 million all of a sudden in an alt season, because at some stage you just need either all the supply needs to be so heavily controlled, or you need a hell of a lot of money in order to force it there. You just can't get there, mathematically, realistically, that quick.
No. And that sell candle that we had yesterday is probably, I don't think that's far off crypto's entire market cap. And what I will say is, whilst you saw a little pump in Bitcoin, I see a lot of people saying gold and Bitcoin correlation. There's not a strong correlation between it. The people who buy gold on the whole aren't the people who buy Bitcoin. They buy treasuries and they buy bonds.
I struggle with those correlation maps, because it's just it's the same as it just doesn't sit well. The M2 money supply thing as well. I understand the fundamentals behind it and the driving forces, but who's to say that money is going to be spent on Bitcoin? Yeah. Who's to say that money is going to be spent? That money could be going to the bonds. That money could be going into a different forex. You don't know that. All you know is that there's, the M2 money supply is going up. And that's the problem with this. So, I tend to take things level by level. I don't want to look too much at the correlations.
Yeah, and that's the thing with when people say quantitative easing is, quantitative easing is essentially the central banks buying their own bonds. So that money is going into bonds and paying bondholders. So you're then at the mercy of what the bondholders decide to buy. And the bondholders on the whole aren't people that buy Bitcoin.
Not of that, especially if the economic outlook is uncertain. What they will do is they will either keep pressure on the banks to keep the rates high so that they can hold on to their own bonds.
It's protection. It's protection, because there's nowhere else, and the amount of money that goes into this, it's money that's so hard to protect through like growth assets, because you would just distort it. If you put that into the crypto chart, you double the entire market cap of crypto in a clip. It's but as you can see anyway, we had this quite a sharp sell-off, and again we had a further liquidation wick, which has essentially, quite from a health perspective, we've taken out quite a nice FVG there and cleared that out. And going back to your auction theory, look exactly where it bounced. Wasn't far off.
Yeah, close to 4,000.
Gold loves round numbers. And if you're a gold trader, that's one thing to keep an eye on, is gold absolutely loves round numbers. But that's from a daily perspective. So I don't tend to trade this on the daily.
You can't. The ranges are too big. You can't leverage it.
And the fees are obscene. However, I do trade this on quite low time frames. So the 4 hour is quite nice to be able to get a trend. So we've obviously had a trend up here, set the previous all-time high, and then we had the pullback that everyone thought gold had topped, pulls back into this consolidation, as you can see, comes down into what was quite a nice order block before pushing back up. I took quite a nice short here, primarily on the basis of breaching the all-time high, grabbing the buy-side liquidity and going down. So that was a very, very profitable short that I took yesterday. As you can see, we absolutely, like, the way we fell through the levels is pretty obscene, but we can see where it bounces on the 4 hour. So typically when I trade this thing, I'll trade off order blocks and I'll look for reactions at volume points within the order blocks. So as we can see, if we go into some of the price action we had here, you can see once we bounced off there, I was expecting a reaction there, which we see a nice little bounce. This was an area that I thought would hold up. I took my long, took it out there, played it again, and then those order blocks then tend to turn into resistance if they're untested. So if we go back into certainly my preferred time frame of the 5 minutes, as we can see from the zones perspective, that this area then turned into resistance for a sell. You came down here. The bounce out of here was quite weak. And so once it lost that, you were looking for a grab there. And then this zone was on the radar then for shorts. Until it regains this zone, I wouldn't be longing from here. But from a short perspective, it opens up as to where you're likely to get a reaction. And as you can see, it comes up, grabs the liquidity here, and goes. Same thing down here.
Was a proper run.
Block. Pardon?
And that was a proper run. That was a proper jump out of the building.
That was somebody clipping money that would probably retire everyone in this stream and more.
That's a painful liquidation if we ever gone through that.
That straight down. Yeah, and then we see obviously quite a nice bounce off this order block, but it's weak. It's weak. And so that then gives you the opportunity to find shorts in this area if you were to regain it. And then we come back down into this order block. And the reaction out of here was quite nice. Obviously, we see a nice push up back into this zone here. But again, it was weak. And we see a strong rejection. So since we've rejected off this level before, it's an area to keep an eye on for a future short. And lo and behold, 20 minutes later, pretty much to the dollar, you'll get the short.
Back into the order block, and then it did it again. It gave you a third opportunity for that one.
Yeah.
So it is really playing nicely on the quarter levels. And you can have a look at those zones. It's 4,250 was support.
Yeah.
And then 4,275. Another quarter level was resistance. So it is definitely listening to that auction theory way better than Bitcoin, to be honest with you at this stage.
Yeah. And then again, see a prime example. Once it's lost this block, you find a bounce at the one below. Again, looking at bounce, very weak. Short, that's a signal, potential shorts from here. Come down, and you get and this is where I think the patient element comes in and making a plan, because there'll have been a lot of people who, and from an inexperienced trader point of view, is you think, oh, I've missed the move, I want to short from here. And
it just runs back.
Whilst it's a good trade in principle, you get taken out. And if you're patient enough to think we're probably going to visit this order block before another move down, you get yet another short opportunity down from here. And then it was just bleed before quite a nice bounce. So this was when we were on stream yesterday, Ruda. This was where my long was from in this here on this liquidation wick. I don't think you can see on the 5 minute where that one originally came from, but it was from this zone here where we've had previous
support. Yeah, and there was also a mass liquidation there as well.
Yeah, and as we know in crypto, liquidation wicks tend to get revisited.
Yes.
And then we see overnight the final one down to, on my chart, is $4,003, so not too far off. And I really need to get this updated now because too much price action has changed. That's the only annoying thing about gold is when we were setting new all-time highs is I was having to update my chart every single day.
I can imagine
for new levels. But as we can see, certainly on the 30 minute, that's revisiting. I've had some nice plays on this morning off order blocks, and it just moves so smoothly. Like you have this really nice, from a pattern perspective, you just have this, you've got these wicks here, but you can see interesting area to long from, this little order block here. So I had a long from there this morning, although I took profit here, which was a bit annoying watching it come up here. But then you have patience again, and I set an order for my second order was really good actually. It was 4129, so I caught the very bottom of this wick, and I was in full profit in 2 minutes. It's yeah, and then obviously we see the weak bounce again, as we spoke about. Weak bounce means down we go, and you don't really want to be getting in the way of that one.
So let's take this conversation. Let's maybe end off to one thing. I want to add this to you guys from the narrative. So you're going to be shorting until we get about 4,300. Then we look to maybe switch the narrative. One thing that I do know that is really powerful for you guys, if you want to try and look at narratives, Fibonacci numbers in sequence, they work as follows: 1, 1, 2, 3, 5, 8, 13, 12. You know, the 1 plus 1, 1 plus 2, 2 plus 3, you know, those kind of things. And typically what we find is when you have a breakout move like this is if you have 8 consecutive blue candles or, bullish candles, if you get the 9th one, you can hold for 13. If you have got 13 consecutive and you get the 14th one, you can hold for 21, because those ratios tend to kick in. And funny enough, now we're rejecting at number, what would have been 9. So if this, for me personally, to be longer bullish on gold, to say that maybe gold goes to $5,000 an ounce, this needs to turn into a green candle almost. Then I could say that the run, the blow off top isn't over. With it being like this, probably the move is done. There's a wave done. We're going to have a wave correction, which could end up doing something like this in this area, where we consolidate and become range bound, fighting 4,250 as a potential. Is this fair price for gold? People bidding at 4,000, people bidding at 4,400 thereabout. So that then opens the door for that. So it's just something interesting to note on this. And then there was a question for silver. Maybe let's end off with this, because silver is also flying up. But I was on the call yesterday, and the guy said something interesting, that from, I don't know how far back, silver has been, and this was something that stuck with me. I think it was, I can't remember the speaker's name, but I mean, it was something that stuck with me. This was silver at 1980, $50. Silver at 2010, $50. And now we've got silver again, 2026 at $50. So what do you make of that triple top there, man?
It's interesting, isn't it? This was my sell point for silver, certainly from a spot perspective. So I was out of this. This was something that I had on my radar. It's amazing how well these things play out, isn't it? I think ultimately from a metals perspective, I think silver was a bit of an outlier in the fact that this also had a short squeeze on it. So you had obviously the London vaults, etc. I don't think, and obviously I know the question earlier was around buying it for the long term. Obviously that would be financial advice. I personally wouldn't, but I've just sold some. I think there's better metals out there, but with all these things, I think from a trading perspective, it gives you plenty of opportunities. I think if you wanted to trade this, there's a lot of opportunity. If you're wanting to hold this longer term, I think there's slightly better ones, and gold sort of serves the other purpose. I think the question to ask yourself, because I've had so many questions of people saying, oh, should I sell gold? Should I sell? What would you buy instead that you think will outperform? Because if you're selling it to realize dollars, are you then taking those dollars to rebuy something else that you think has more upside? Or are you potentially holding those dollars to try and buy this cheaper? Or do you want to buy Bitcoin because you think Bitcoin will outperform it? I mean, ask yourself the question, what will outperform it? I mean, if this runs back to where we had the sell-off, you've got a 10% move, 12% move. carries a bit more risk. Is there other things in the market that you think you're more likely to get a 12% return on? And just sort of ask yourself that question from a spot investing point of view. I tend to look at trading levels on it. I think it's quite a fun asset to trade because the moves on it are violent enough that you can make some nice returns from a scalp, but it's controlled enough that it still has proper elements of price action, which I think for me is what crypto has been lacking for a while. And I think if you're learning to trade on these highly liquid assets like gold, silver, forex, etc., gives you a good appreciation of price action and what proper price action looks like.
Yeah, frustrating thing with Bitcoin at the moment, eh? It's been a trying time for us Bitcoin traders. But in the end of the day, you stick to the stuff. Bitcoin has been kind to me, but I'm open and I'm really eager to try and get in on some of the gold and silver trades. So I'm going to definitely focus a little bit more on that going into the future because it's easy money to be had there. Yeah. Let's be honest, it's not about what you trade, it's whether you can make easy gains there. So any other metals for now? I know palladium is high on your list.
I absolutely love palladium. I did sell a lot of spot of this up here, and I caught I know Rudo, we spoke on Friday, and I was very, very elated, but I shorted the hell out of this thing on this retest of the order block and realized a 12% unleveraged move down. Obviously, my leverage was slightly higher than unleveraged. So it was a fun weekend. As this one's a little bit more, if you're trading it, is a bit more to watch because you have these quite violent liquidation wicks, which you have the liquidation wick into the order block and a perfect move up. If you trade it, that's fantastic. I'm slightly annoyed I didn't have an order in down here. I had a sell order to get out of this position. I should have had a buy order.
But when you're euphoric, when you're a genius, that's when you need to walk away.
Yeah, exactly.
Because that's when you'll risk all that again on the other way. I've learned, when you get that gimme trade, walk away, go and enjoy your weekend, come back Monday.
Exactly. Like 80% of the trade was closed here because I didn't want to hold it over the weekend. But I left quite a nice runner with a stop out here and got that. As you can see, liquidation wicks always get revisited. Also important to know is there was a previous liquidation wick that would have given you an entry for this pump that we had yesterday, and we seem to be grinding a little bit lower now. So as you can see, probably not on the 5 minute, but the wicks here, I think, have now been taken or are at least close to being taken. No, they've not been. That one's been taken. This one hasn't. So I anticipate we probably come out and clear this block here. But ultimately, I'm quite bullish on this. I think this has, this is the metal that seems to have lagged behind. I think if I put this on the weekly, you can get a bit more of an appreciation. A lot of liquidity here. So you were always likely to get some sort of sell reaction here. The wicks here tell you all you need about the amount of liquidity that sits in the zone. So you've got reaction off. I think this has another run in it. And I think when you look at the gold chart and how crazy that's gone, you've not even scratched the surface on palladium. In terms
that
of
has more, highs. Yeah. And I think from a fractal, immediately everybody should start screaming cup and handle. You're becoming a banana. It's becoming a banana. Pattern there at the bottom. So at some stage there should be a little bit of a consolidation, either below that black line at 1,100 or 1,500, or above it. Whichever way. If you start building a base there, that's just setting you up for another big impressive move to the upside. Where I think silver at this stage has already, built that base, and is breaking out. So the move is almost late. What I mean by that, if you have a look at this chart here, there was your run. There was silver did the base already, and it's done the move. So palladium might be sitting at exactly there now. It's going to build the base either on top or below whatever level it decides to do it. but then the run will still come, and that's what you're kind of pointing towards, correct?
Yeah. Platinum similar, although platinum has started to run. This is also a metal that I quite like to hold. I did get out some spot positions around here, and that looks pretty scary, but I think this again probably retraces down to here, and then you have a move in it. But yeah, I quite like platinum. And then another one on the radar that's quite interesting is zinc, because this tends to move counter to the rest of them. So as you can see, what else we've had? A red day on gold, silver, palladium. Zinc's up 1.8 today. Very strong uptrend on the weekly.
So we can say that gold is Bitcoin. We can say silver is Ethereum, perhaps, and then zinc would be XRP.
Yeah, 100%. But yeah, as you can see, back into this level, and this thing moves again. I would urge caution if trading it, because this thing does move quite violently. Excuse the positions. I've had some fun on this week, but as you can see, it is prone to these, and these are pretty brutal if you get caught on the wrong side. But if you get one, then it's pretty.
Yeah, then it runs, and then it's 2 minutes, and you got paid. Okay.
Yeah.
Let's end off the stream there. I think what we can do is we can have a look at this a little bit more on future calls. There's one question I think I still want to try and answer to, so if we can move back to a Bitcoin chart, and maybe this is putting the things a little too far ahead of us, looking too far ahead, but it's a valid question from Mikey. So let's have a look at that. So the question is, where do we see Bitcoin bear bottom? Is it 69, or do we have to go as low as 50K? So I'm going to throw it to you to kind of give me your feelings. Let's say it is over. Let's say it is going to move down. Where do you think it's going to go?
I think certainly this area feels like it's going to be tested. It's hard to envisage that we get another play down here. The bit that screams to me on a monthly is 60K feels like a good level, because then that would be a perfect SR retest.
Yeah.
I think probably clearing the base of this candle, so like that 68, 69K is interesting. I think there might be some aggressive wicks below. Ultimately, I think it depends how we enter the bear market, because if the bear market is, I don't know, like an implosion of MSTR, I think that would be very different than a traditional bear market. And I think the risk posed by some of these treasury companies is very different to what we've previously had. But yeah, if I had to put a line in the sand on the spot, I think that 65K-ish is a nice SR retest on the high time frame.
Okay, well, there you have it. So 69K from Mr. Wizard. Mine is maybe a little bit more conservative. I feel like 89 would be the area of the low. I don't know why my trading view is frozen, but okay, it is what it is. So 89 would be where I would kind of call it, purely because there's that adoption section to it as well. And the thing with the treasury companies is what they cannot do is they can't sell it. They can buy it, but they can't sell it again. So that supply gets taken out of circulation. It's moved away, So at the end of the day, it doesn't, in a way, they don't really impact price going forward. And retail won't have enough juice left because it's so expensive to sell the thing down 90% again out of fear or being liquidated. So I kind of want to take the other side of the argument and saying that the fact that that's there, it's going to move it into hands. It's going to want to keep it and not sell it when there's a mass liquidation. So yeah, for me, that's a bullish signal. And so therefore, I think just as I was conservative for Bitcoin with the top, I'll be conservative with the bottom and say it's going to start ranging in a little bit smaller. But time, as we do these things, we take things level by level. So Mikey, we don't try and live off predictions. We take it as it goes. I'll get it from there. There's about 320 people joining live right now, guys. I want to ask each and every one of you to make sure to hit the like, hit the subscribe, and go follow Wizard on Twitter. I will bring up his handle again. Let me just quickly do that. It's at Wizard of Alt. There you go. So go give him a follow. And thanks so much for your time, my friend. Gold summary. Give me gold summary. I'm going to ask you to give me a gold summary in literally in a minute. Gold in 1 minute. There you go.
I think we have another nice run up on gold. I think we're currently consolidating after a liquidation. I think ultimately the question to ask is, gold will stop going up when we have either a catalyst for distribution, and distribution on gold takes years, or the dollar gets a lot stronger. I don't think anyone in here is optimistic on the dollar getting extremely stronger. I think we're seeing a shift from central banks out of what are traditional bonds and more into gold. And I think just from a scale perspective, the global bond market is worth $150 trillion. Gold is currently sitting at $28 trillion, and crypto is sitting at $3.6 trillion. So we are still a very small fish in the pond.
Yes. And those big ponds, they're going to need bigger vessels. They can't just use Bitcoin for that. Although we want them to.
I mean, I wouldn't mind a cheeky $1 trillion clip would be quite nice, wouldn't it, Rudo?
Yeah,
not unless you're short, actually.
Not for the short at the moment. While we were speaking, guys, just to quickly, end off the stream on this, Bitcoin has done absolutely nothing. So for the last 46 minutes, I didn't make or lose a cent. So this is flat price action if ever there was, and it poses the question: the market, is it exhausted? Is it uncertain? It almost doesn't know what it wants to do at the moment. So it is a choppy market, choppy environment. But because of that, more traders, when the market starts becoming calm, when the ocean is calm, more ships enter into the water. And it means that more opinions will come. And the opinion comes with a stop limit being either to the upside or to the downside. So when you move into these calmer waters, that opens the door for the Darth Maul candle. The one that basically just sweeps everybody out, takes the bulls, takes the bears, and then continues on with the trend. I don't have, I think, on the 4-hour one that I can refer to. We haven't had one in ages, but we had in the previous zone here, when the Darth Mauls started picking up. Let me see if I can find one, but I can't find one. But it's normally proceeding when the market just kind of doesn't know what it wants to do. It just takes everybody out. I think the daily would probably
take
just
out one side and go the other way.
Yeah, it just takes everybody out. Whoop, whoop, there you go.
Yeah.
So we're sitting in that situation where as soon as the market doesn't really know what it wants to do, we had a big move, and then it just doesn't know what it wants to do. Chips, takes everybody out, and then does its thing. Yeah. And that's the cautionary area where we are right now for Bitcoin, guys. So the short, I'm not moving any stops. I'm holding this for the bear market low. I'm still in a lot of my shorts, guys, and I'm not moving any stops into harm's way just yet. Waiting for this to kind of just shake out. I'll add to this, and then we'll try and drive that up. Okay, so that's everything. Mikey has followed you on Twitter, so there you go, buddy. You've got one more follower. 352 people joining live right now, and thanks, Mikey, for doing just that. And that's it. I think we can end off the stream. Thanks so much, buddy. Thanks for taking time chatting with us. Thanks for everybody joining in. We didn't have Peter. He's traveling. He's in Greece at the moment. So the comments weren't really managed as nicely as they would. Peter would be kind of on top of that. So wish him safe travels. Enjoy his trip. And then we'll be back on Friday for more Trade for a Living. Cheers, guys.